Hello dear students, I am Parveen Kumar, PGT Commerce from Kendriya Vidyalaya Sangathan. In today's video session, we shall take up session 1 of chapter Financial Statement of a Company, part 2 of class 12th Accountancy. In this session, you have already studied format of balance sheet as per Schedule 3rd of Company Act 2013. Now, we are going to discuss about statement of profit and loss account. Dear students, the learning objectives of the sessions are: it will help you to understand meaning of statement of profit and loss account. It will help you to understand different headings of statement of profit and loss account. It will help you to draft statement of profit and loss as per your requirement. It will help you to make comparison. It will help you to learn about users of financial statement. Dear students, now we will learn the meaning of statement of profit and loss account. In class 11th, you have studied how to prepare profit and loss account. In case of a company, we will prepare statement of profit and loss account as per Companies Act 2013. Statement of profit and loss account. It shows the financial performance, that is result of business operations during an accounting period. It is described as statement of profit and loss account in part 2nd of schedule 3rd of the Companies Act 2013 and is also known as income statement. Characteristics of statement of profit and loss account. It shows the financial performance of a company, that is revenues, expenses and profit or loss for the period. It is prepared for a past period and thus is a historical document. It is for a specific accounting period. Dear students, please look into picture. You will find the format of statement of profit and loss account. With the help of statement of profit and loss account, we can ascertain profit and loss for the year. To ascertain the profit and loss for the year, first of all, we will find out total revenue by adding revenue from operations and other income, then deduct all expenses from income to ascertain profit before tax. After calculation profit before tax, we will deduct income tax to find out net profit or loss. Dear students, we will learn different contents of statement of profit and loss account one by one. First of all, we will discuss revenue from operation. It is the revenue earned by the company from its operating activities to earn profit. If the net sales for a manufacturing company, fee earned by a service company and dividend earned by a financial company. Dear students, now we will learn about other income. Other income, a company besides earning revenue from operations may earn income from other sources. It means income earned by a company from its non-operating activities. It includes gain on sale of assets, bad debts recovered, interest earned by way of fixed deposits by non-financial companies, etc. In the case of financing company, interest and dividend earned, etc. is revenue from operations is being the operating activities of a company. Dear students, after study of total revenue, that is revenue of operation plus other income, now it is time to study expenses which are deducted from total revenue. To ascertain profit and loss for the year, expenses, cost of material consumed. It is first entry items in the expenses, part of statement of profit and loss. The term material means raw material and other materials used in manufacturing of goods. Cost of material means cost of raw material and other materials consumed in manufacturing the goods. To calculate cost of material consumed, we use the following formula: opening stock plus purchases minus closing stock. Dear students, now we will learn second components of expenses, that is purchase of stock in trade. It is the goods purchased for resale purpose. In case the company carries out further processing on the goods purchased, they are not classified as purchase of stock in trade, but become part of cost of material consumed. Likewise, if any semi-finished goods or material are purchased for further processing, the same should be included in cost of material consumed rather than as stock in trade. Dear students, our next component of expenses is change in inventories of finished goods, work in progress and stock in trade. It is the difference between opening and closing inventories of finished goods, work in progress and stock in trade. These will be shown as follow: opening inventory of finished goods less closing inventories of finished goods. Part B, opening inventory of work in progress less closing inventory of work in progress. Part C, opening entry of stock in trade less opening of stock in trade. Total A plus B plus C. Dear students, now we will learn about employees benefit expenses. Employees benefit expenses, it is the payment made to and for the benefit of employees like wages, salaries and bonus, leave encashment, staff welfare expenses, etc. are shown in the notes to accounts on employees benefit expenses, and total amount is shown on the face of the statement of profit and loss employees benefit expenses. Now, dear students, we will learn about finance cost. Finance cost, it is the cost incurred by the company on the borrowings, that is interest paid on loan, bank overdraft and cash credit limits. Finance cost also include expenses incurred for the borrowing such as loan processing fees, discount on issue of debentures and premium payable on redemption of debenture. However, bank charges are not shown under finance cost, but are shown under other expenses, they being an expenses for service availed from bank. Dear students, now we will learn depreciation and amortization. Depreciation is the expense written off, it being a cost of tangible fixed assets written off over their estimated useful life. All of you are aware that meaning of depreciation, it is gradual decrease in the value of fixed assets. Amortization, like depreciation, it is the expense written off, it being a cost of intangible fixed assets written off over their estimated useful life. Depreciation is charged in tangible assets while amortization is charged on intangible assets. Dear students, now we will discuss about other expenses. Expenses which are not shown above heads are shown under other expenses. The details of expenses shown under other expenses shown in notes to accounts may be shown as direct expenses, and indirect expenses, for examples, carries inward and carries outward. Carries inward is a direct expenses and carries outward is an indirect expenses. Examples, bank charges. Dear students, now we will discuss an important supplements which shows detail of items already shown in financial statements, notes to account. Balance sheet and statement of profit and loss are supported by the notes giving detail of items in the balance sheet and statement of profit and loss. Notes to account is the statement attached to the financial statements and is the part of financial statement. In the significant accounting policies and additional information required to be disclosed as per Schedule 3rd of the Company Act 2013 and explanatory notes. Now, we will discuss a statement which shows inflow and outflow of cash, that is cash flow statement. Cash flow statement, it is statement prepared in the manner prescribed in Accounting Standard 3rd cash flow statement and shows inflow and outflow of cash and cash equivalents during an accounting period. This statement is important for better understanding of financial statement. It is an essential tool for short term financial analysis. Dear students, these are the objectives of financial statement. Objectives of financial statements: to provide financial data on economic resources, to show implications of operating profit on the financial position of a company, to provide information about cash flow to investors and creditors, to provide sufficient and reliable information, to present a true and fair views of the business, to assess effectiveness of management towards utilizations of resources. Dear students, what should be essential of a financial statements? Now we will discuss essentials of financial statements. Factual information. Financial should disclose the factual information about the financial position of a company. It is the duty of company to disclose true and fair picture. Second is understandability. It should be prepared in understandable manner. Third is comparable. Financial statement should disclose the information in manner that the users can compare the information of the same entity over years and also compare with other companies also. Verifiable. Information disclosed by the financial company should be verifiable from the records of the company. Relevant. Information disclosed by the financial statement should be accordance with the legal requirement. It is so because they are considered relevant to the users, having been set after through public debate. Dear students, these are limitations of financial statements. Limitations of financial statement historical records affected by estimates. Third is different accounting practices. Fourth is qualitative elements are ignored. Fifth is price level changes are ignored. Cannot meet the purpose of all the parties. That was the topic for today's session. I hope you all have understood it well. Before ending the session, let us have a quick recap of what we have learned today. Financial statement of a company. I hope you all have understood today's session very well. With this, we have now come to the end of today's session. I hope you have enjoyed it. Thank you very much. Happy learning.